Ever hired a plumber or a consultant and just stared at the bill wondering, how on earth did they come up with that number? Is it all just random? Is there some secret formula they're hiding? Well, today we're pulling back the curtain and getting into exactly how service businesses in the US price their work.
Yeah, this is what most of us think, right? That it's just a bit of guesswork. They throw a dart at a board or maybe just charge whatever they think they can get away with. It feels totally mysterious and, let's be honest, kind of arbitrary.
But here's the thing. That feeling, it's completely wrong. There is a very real, very predictable logic that guides pretty much everyone from your house cleaner to that high-powered business consultant. And once you see it, it all starts to make perfect sense.
Okay, let's just start by blowing up the single biggest myth out there when it comes to pricing. And that's the idea that what you pay is directly tied to how hard someone worked or how much they sweat.
Here it is, the fundamental rule. Pricing isn't about effort, it's about the outcome and the risk. Think about it this way. When you call an emergency plumber at 2 a.m. because your kitchen is flooding, you're not paying them for the 15 minutes it took to turn a wrench. You're paying them to solve a catastrophic, high-risk problem and prevent thousands of dollars in water damage. That's the outcome. That's what you're really buying.
So, to really get this, we got to start at the beginning. Let's look at the model everyone knows and understands, pricing by the hour. It's the simplest, most common way businesses start out.
In the US, you can kind of break these rates down into three big buckets. At the base, you have basic labor, like a house cleaner, maybe around $40 an hour. Then you step up to the skilled trades. We're talking electricians, plumbers. That's going to be closer to $120 an hour. And then at the very top, you've got your specialized professionals, like a business consultant who could be charging $300 an hour or even way more.
But here's the part that almost everybody misses. That hourly rate you pay, that is just the tip of the iceberg. Buried inside that number is all the other stuff. Business overhead, liability insurance, travel time, the risk that a client just doesn't show up, all the admin work, and, a profit margin so they can actually stay in business. So get this, to actually take home $40 an hour, a contractor might have to charge you $100.
So you see the problem with hourly rates, right? They put a hard cap on how much a business can earn, and they make the client super anxious. So smart businesses evolved. They upgrade to a flat rate price.
And this comparison just lays it out perfectly. Hourly pricing sells time, and you, the client, are nervously watching the clock. All the risk is on you if the job takes longer. But with a flat rate, the business is selling a guaranteed result. Certainty. The business takes on the risk, sure, but in exchange, you, the client, get total peace of mind. And that certainty is a premium product people are happy to pay more for. All right, now we get to the top of the mountain, the most powerful, most profitable pricing strategy of them all. This is where the real pros play. It's pricing based purely on the value you create.
Let's make this super clear with an example. So imagine a marketing consultant helps a small business, and because of their work, that business makes an extra $200,000 in revenue this year. Now, the actual work might have only taken the consultant, say, 20 hours.
So, what's the right price here? Should they just charge for 20 hours of their time, or is the price based on something totally different?
Well, what if they charge $5,000? I mean, the client is going to be ecstatic, right? But honestly, that feels way too cheap. The consultant just created $200,000 of value and only captured a tiny little piece of it.
How about $20,000? Now we're talking. This feels about right. The client pays $20,000 to make $200,000. That's a 10x return on their investment. It is an undeniable, absolute home run for the client, and it's a fair price for the consultant.
Could they push it even higher? Could they charge $50,000? You bet they could. The client is still getting a 4x return on their money. Think about that. The price has nothing to do with the consultant's effort and everything to do with the client's massive financial gain. Same work, totally different price, because it's all about the outcome. And really, this boils the entire philosophy down to one simple question. The most successful businesses stop asking themselves, how long did this take me? And they start asking, what is this result worth to my client? That one mental shift changes absolutely everything. Okay, so these pricing models don't just exist in a vacuum. To actually make them work and to stay in business, successful companies follow a bunch of unwritten rules. They're all designed to protect their profits.
Let's quickly break these down. First up, minimum job charges. Look, a plumber isn't coming to your house for $20. Just showing up costs them money in gas and time, so there's a minimum fee. Second, retainers. This is where a client pays a fixed amount every single month for ongoing work. That gives the business predictable cash flow. And finally, you have to remember all the hidden costs: liability insurance, software, marketing. It's all baked into that final price you see. A high price does not always equal high profit.
And of course, we can't forget about geography. The exact same service can cost wildly different amounts depending on where you are. Why? Well, it's pretty simple. Cost of living, how much competition there is, and what clients in that area can afford to pay. An electrician in New York City has to charge way more than one in rural Texas just to cover their own bills.
So after all this, what's the real lesson here? What's the big takeaway? It's not just about finding ways to make more money. It's about building a business that can actually survive and then maybe thrive. The smartest pricing is built for survival first, profit second. Your prices have to be high enough to cover you when a job goes sideways. They need to filter out the nightmare clients who don't value what you do. They should reward your best, most loyal customers. And ultimately, your pricing needs to build a model that can grow, so you're not just trading your time for money forever. And that really brings us to the single most important point of this whole thing. The goal isn't just to jack up your prices. The goal is to charge correctly. It's about finding that price that perfectly reflects the value you provide, covers all your risks, and lets you build a healthy, sustainable business. So the next time you see a price quote, or maybe you're setting one for your own work, ask yourself this one question. Is this price just about the effort I'm putting in, or is it strategically designed to build something that will last? Because that answer, well, that makes all the difference in the world.